Welcome back. Thanks for staying with us on Smart Money as part of our Outstanding Women in Finance series. I have with me Lakshmi Iyer, who's the CEO Investment Advisory at Kotak Investment Advisors, and she's telling us how to approach the markets in 2023 given all the volatility that we're seeing right now. Lakshmi, thanks for staying with us. Before the break, you were telling us about how perhaps you should be a little cautious on equities and look at other asset classes. You said you should have an exposure to gold, of course a smaller exposure, but exposure nevertheless. What about REITs and InvITs? That's a fairly new asset class. Tell us a little bit about, if I'm a layman and I'm a rookie in REITs investments, how should I go about it?
So, Sonia, if you want to own real estate but want the liquidity attached to it, then REITs are the best way of ownership. And of course, that includes InvITs, which is infrastructure assets. It's pretty seamless as the way you transact in any stock. It's available as a listed entity on the stock exchange. So you just go ahead and buy and sell. The only caveat you need to keep in mind is relative to stocks, or maybe the larger stocks which are traded, the liquidity might not be that very high. So there could be an impact of entry exit. So have a sparing proportion of that to your portfolio and don't make it an overwhelming portion of your portfolio.
But don't you think it's better to have exposure to real estate stocks instead?
Stocks are very different. Stocks are part of your equity exposure. REITs and InvITs, I call them the hybrid instruments. So they have the risk-reward trade-off. They allow you a participation in the growth story and therefore some equity upside. But they are constant, dividend-paying kind of instruments and therefore more aligned to the fortunes of fixed income. So it won't be strictly comparable. And inherently, real estate is high beta, high volatility. REITs, InvITs are not. So I think that's where the differential is. So I would call REITs and InvITs as an extended arm of your fixed income allocation and not equities.
Okay, got that. Since equities is our first love, right? Let's get back to that. How cautious are you on equities now? I ask because throughout 2022, despite so many challenges thrown at the markets, the Indian market was quite resilient, one of the best performers. You still exhibit some caution this year?
I would say it will be in patches. We are cautious given price. Bhav Bhagwan hai is what we all live and swear by, and that is the reality. So when you compare it to some of the global peers, obviously there is some concern in terms of long-term averages. The way you look at it, obviously the valuations are not cheap, may not be astronomically high, so somewhere the truth lies in between. So it's okay to be a little bit more guarded when you are allocating money to equities. Not allocating is not a solution because you don't know how much, how far, how soon it will correct. But I think given where we are and given the global dependencies, given the kind of headwinds that some sectors are facing, even in India, given global uncertainties, it's okay to have a slightly more guarded approach when you're deploying money in equities.
So when you say guarded approach, suppose I want to reduce my exposure to equities, right? Given it's a recession coming up, should I move to raise my cash levels? Should I sort of churn out into debt? What's the right approach now?
So if you are ab initio 70-30 and you are say 72 in equities and the remainder has come down, then plow that 2 rupees out into the asset class which is supposed to be. So that is one way to plan your asset allocation. The other way is if you're in the deployment stage, then go easy. Do it in installments, go in a staggered manner, have 100 rupees in a debt fund, in a liquid or an ultra short-term fund, and stagger it into 6 or 7 installments so that you're able to ride through this wave, because it's humanly impossible. At least I don't know how to get it right, how to get you the best low point and get you the best exit point. That's difficult.
Okay. So what are the big risks to this market now? Of course, there's a global recession, there's valuation concerns as well. But what else would you put on the key risks list?
So these were the 2 key risks that you very well articulated. Aside of that, I would say the geopolitical risk. I don't know when you're sleeping which country is out to attack another country. So that's a risk which you cannot ignore. The other key thing is inflation in some pockets. Whether it's the globe or whether it's India, the core inflation is still very sticky. So how long will you have high interest rates? So plateauing out doesn't mean pivot. Pivot means you actually head towards rate cuts, which does not seem to be the case yet. So I think these are some of the other risk factors over and above the fact that Valuations are there, global uncertainties persist, and of course, closer home in India, we are in the earnings season. So how many beauties come, how many ugly ducklings, and all of that. Yeah. I think it's going to be a mixed bag, and it's going to be a treadmill. So you have to brace yourself and keep your energies high.
Okay, we just have a couple of minutes left. So Lakshmi, you've been with Kotak for over 22 years now, and this is a day and age where people are changing jobs like they change their clothes, right? I was reading a review which suggested that out of 4 people, 3 people are looking to change their job in 2023. What is your advice? What is your guidance to young investors, fund managers, perhaps who want to follow your footsteps, who are watching you right now?
Sonia, I got married to Kotak before I got married to my spouse. So marriage is a long-term commitment. So you have to stay committed unless there is something which changes very dramatically. That's number one. Number two is when you get up and say TGIM, thank God it's Monday, equally in the same zest as you say TGIF, I think that's what sustains you, and I think that's exactly what has led me to continue in this organization, in this firm for 23 long years, because you are an employee, yet you feel empowered like an entrepreneur. So I think that's very important for all aspiring youngsters, all of them. This is the world of instant gratification. You post a picture on Instagram and you want to see likes. Life is not like that. Career is not like that. So be patient, be persuasive, and go for the long haul. It's fully worth it.
So one final question, right? Because this is a question that always crops up on my mind across industries. We are seeing so much disruption. There are reports suggesting that in 5 years from now, all our jobs are going to be taken by AI or by machine learning, by a bot, so to speak. How do you stay relevant at a time like this?
See, upskilling, there is no two ways about it. You have to stay relevant. You have to be abreast of what is happening, quite literally. So you have to walk the talk. If you believe it is good for the industry, it has to be good for you in person. So upskill yourself, take courses, attend workshops, do all of that, read a lot, and keep yourself relevant. I think it's so very important. I don't think doing away with human beings could be an option, at least till the time I retire for sure. But
hope not.
The point is, but the point is, using technology as your friend and not looking at it as a foe is going to be extremely important.
Okay, I guess the buzzword of 2023 is going to be upskill, right? That's the only way to stay relevant and stay dynamic. Got that. Lakshmi, it was a pleasure speaking to you. Thank you so much. I think we generally talk markets a lot, but today we had the softer, finer side of things that we spoke about with respect to your career. And since it is our Outstanding Women in Finance series, I want to wish you all the very best. I hope you have another 22 long years of your career, and wish you all the success.
Thank you so much.
Okay, with that, it is a wrap on this edition of Smart Money. Thanks a lot for watching. Keep writing to us and letting us know who you want us to feature on our shows. And we love receiving your feedback. Have a great weekend. Keep watching CNBC TV 18.